The Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs, I'll speak about the general trade setup. And it doesn't look all that good as far as global equities are concerned, the SGX Nifty is concerned. The SGX Nifty has slipped further, it's indicating a downtick in today's trade. Yesterday was a bad day of trade for our markets, so the SGX Nifty indicating a slight negative opening for our markets. How did the ADRs pan out in trade? ICICI, Wipro, Tata Motors, all of them ended down lower. What did well was Dr. Reddy's as well as HDFC Bank. So these were the two ADRs that did well in trade. Crude is down almost 1.5% overnight. It snapped the 3-day rally, but in morning trade, it is doing well in trade. It's up close to 0.5%. The US stockpiles data did come out, and that is something that has encouraged the price to move up significantly. Now, as far as commodities are concerned, mixed close for the base metals on LME, because if you're looking at some of the metals that happened, nickel was down 1.5%, tin was down 1.2%. What did well was counters like zinc and lead, which were up over 1%. Now, as far as commodities in China is concerned, steel is down 2%, aluminum is down almost 0.7%. Rubber now has actually opened in the green, but has managed to slip down. It's down close to 1% in trade currently. Gold is trading muted in early morning trade, so no cues coming in there. FIIs were surprisingly net buy yesterday to the tune of almost 840 crores. DIs were sellers to the tune of same amount, almost 850 crores. But on a month-to-date basis, FIIs have been net sellers to the tune of almost 3,500 crores, and DIs have bought in over 4,400 crores in the cash market. Now, if you're looking at what happened with the Nifty, it was down 82 points, slipped. It actually snapped the 3-day rally. All the sectors ended with losses. The VIX surged almost 8% in trade, and sectors like FMCG, infra, real estate, these were the ones that saw maximum amount of selling that came in. Now, the Nifty was down 82 points. What contributed on the negative side? HDFC Bank, ITC, ICICI Bank and TCS were the ones that contributed negatively. Majority of the losses came in from the other sectors. So 14 on the positive side, 96 on the declining side, and a big sell-off that happened in trade. But Agam, what are the FNOQs indicating?
Well, it looks like there's consolidation going on between 10,200 and 10,300 on the Nifty, though we did see the Nifty come off to a certain extent. And we did see some amount of shorts building up into the system with the open interest up nearly 1%. When it comes to the Nifty Bank, well, once again, given the fact that the index moved down by around 1%, we had a 13% increase in open interest. So the short build-up was a little more aggressive in the Nifty Bank futures. But the VIX, of course, naturally also moved up back above the mark of 15.3. So this could concern some traders who are longs, and the put call ratio also fell to 1.26, but that was a given considering we saw the Nifty come off as well. But what does this mean when we say that the Nifty put call ratio has fallen to 1.26? Well, this is as far as the distribution is concerned, and as you can see, we're seeing 10,000 with a lot more, and that is where we are looking at a substantial support building up there, and 10,500 may likely see some amount of resistance for the Nifty to move up. That said, moving in terms of the way open interest has changed yesterday, well, as you can see, we have seen a little more writing in the 10,000 put, and of course a lot more writing in the 10,500 and the 10,400 calls. But there are some stocks which did show some weakness yesterday. Oil India is one of them. We saw about 17% increase in open interest. Along with Oil India, we saw weakness in Hexaware as well, where we saw about near 14% increase there as well. And of course, on the other hand, we're looking at PC Jeweler. We saw short covering in yesterday's day of trade. So we'll have to wait and watch as to where these stocks take us in today's day of trade as well. But it's Janet Yellen's second last Federal Open Market Committee as chair of U.S. Federal Reserve, and there's nearly 100% consensus on a rate hike. And it's actually what the Fed will say about the new year. That's caught the fancy of the investors. Here's Kathleen Hayes of Bloomberg News with all the details.
We know that a rate hike is expected for December. This is a two-day meeting. It started on Tuesday. It ends on Wednesday. It's the last one of the year. It's the last one where Janet Yellen will have a press conference. And if for some reason the president decides to confirm Jay Powell early, I don't think he's expecting that. Janet Yellen she'll step down once he is sworn in. That's what I'm trying to say. So a lot of interesting stuff potentially coming out of this meeting. First of all, rate hike. I think that's interesting. It may not be suspenseful. WIRP, W-I-R-P, World Interest Rate Projections on your Bloomberg. Here you have it up in the corner. Remember just a couple of days ago, they were at 98%, but boy, oh boy, everybody's all in. They're not going to bet anything but yes, rate hike in December. Now, what else is interesting here? Of course, it's a summary of economic projections. It's the Fed's forecast. Each member of the FOMC submits their forecast for GDP, unemployment, and inflation, and those are updated every 3 months. So the last time we got the SEPs, that was in September. This is December, so it's time to update them again. And importantly, what comes out of the SEPs is the dot plots. And the dot plots is where we could have a little drama. Because right now, markets are saying 2 rate hikes in 2018. That's up from just 1. They're getting a little more believing in the Fed's commitment to inflation and gradual rate hikes. But there's people or banks like JP Morgan, Goldman Sachs, who say you could have 4 rate hikes in 2018. So let's just kind of refresh our memory. Look at the dots with me. DOTS go. And what you can see, here's the 2017 dots. Very broad consensus in the second half of the year for 3 rate hikes. But when you look at 2018, here's the consensus for 3 in 2018 as well. But you can see it's much more diverse, much more divided. Chris Lowe from FTN Financial with us earlier said that he thinks, if anything, you're going to find a couple of people down here drifting up higher to the 3, maybe, but he said it would only take 3. See, there's 6. Only take 3 to build a consensus, a small consensus, but a consensus nevertheless for 4 rate hikes. So that's, I think, why there is a very important amount of drama around this. And finally, of course, Janet Yellen is the last press conference, and we're going to want to get a sense of how she describes the consensus, the FOMC, as she, swan song, whatever you want to call it. We know that she's led them very effectively, and at least at the beginning when Jay Powell takes over, presumably he's going to walk in her policy shoes, at least at first.
Back to local equity markets. Stock of the day is Talwalkar Fitness Value, Better Value Fitness. It's a healthy set of numbers that we're looking at for the company. If you look at the top line growth, that's a 10% growth that we're looking at a number of around 97 odd crore as compared to nearly 88 crore. Net profit has also risen sharply for the company. It's a 25% jump on year-on-year basis at a number of around 36 crore as compared to 29 crore that we've seen in the corresponding quarter. A healthy set of performance coming in even on the operating performance from the company, a 15% rise on year-on-year basis at a number of around 60 odd crore. Margins have expanded to 62% as compared to nearly 59% that we've seen in the base quarter. So what has led to a good set of numbers will be your higher revenue and the decline in employee benefits expenses that we've seen that have actually aided the operating performance of the company. Employee benefit expenses as a percent to your net sales has come down to nearly 13% from 16% earlier. Also, if you look at the other income, that component has jumped really higher. That combined with your operating efficiency has led to a sharp jump on bottom line. Other income has risen nearly 5 odd folds in this quarter on year-on-year basis to a number of 6 crore as compared to 1.3 crore that we've seen in the corresponding quarter. In terms of other information that we have for this quarter, the company has added around 47 centers in current quarter. The total center count now stands at 78 centers. It just added 12 new centers as of August 2017. Just to give you a rundown of what the company is, it's a fitness chain operator that we're talking about, which has a market capitalization of 993 crore and has fetched a return of more than 20% both on yearly as well as YTD basis. With that, let's toss it over to Saloni for rupee and bond market update.
Thanks for that, Nikki. So starting about how currency market performed yesterday, the rupee actually hovered in a narrow range of 10 paise and it ended marginally lower by 3 paise at 64.40 levels against the dollar. Now on the macroeconomic data front, both retail inflation numbers as well as industrial production data surprised the market as retail inflation unexpectedly rose while industrial production actually slowed down in October. Now this could pressurize rupee in today's trade. Now on the global front, US dollar rose against a basket of major currencies. It now trades above the crucial 94 mark ahead of the FOMC rate decision today. Also remember the 2-year treasury yields actually touched a 9-year high yesterday as traders anticipate a rate hike in today's meeting as well as in other hikes in March 2018 and September 2018 according to a Bloomberg report. Elsewhere, the pound continues to trade under pressure despite a strong UK CPI numbers which came in yesterday evening. Now coming back home, dollar rupee is trading at 64.55 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade. Moving on to bond market, yield on benchmark 10-year ended at a 16-month high at 7.19%. Now remember that the 10-year yields is on course for a 5th straight monthly rise on the back of higher bond supply, rising inflation and concerns over widening fiscal deficit in India. Now lastly, global funds reduced their rupee debt holdings yesterday. They reduced their debt portfolio by approximately 1,200 crore according to NSDL data. Well, having said that, Jayesh, how is commodities pairing out today morning? Crude oil prices have actually slipped from 2.5-year peak to now lows of near $63 per barrel. So how are they pairing out?
That's right, Saloni. So, crude oil prices actually slipped more than 2% overnight. That is for the Brent version. And in fact, WTI also slipped about 1.5% overnight. But mind you that oil prices are trading with a positive bias in Asian morning hours to the tune of about 0.5%. Now, API is expected to report an US inventory decline to the tune of about 7.4 million barrels for last week. Whereas on the other hand, EIA has forecast that US crude output will be at a record high for next year. So two contrasting views coming in over there. Will be interesting to watch out what really pans out. Moving on to the base metal space, we saw mixed close for all of the base metals on the London Metal Exchange. Zinc actually rallied as Glencore restart plans fell short of what the market was expecting. Also, aluminium prices are hovering near the 200-day moving average. So, make or break situation panning out over there as well. Amongst the other base metals, copper, nickel and tin actually declined in trade, while lead rose on the London Metal Exchange. Similar cues can be seen on the Shanghai Futures Exchange, where steel has actually stood out and has dropped more than 2%. And moving on to precious metals, gold and silver have actually stabilized. Gold has actually taken support near the 1240-1243 mark. Now this is on the back of dollar index, which has broken above the 94 mark for the first time since since 21st of November, and it will be important to watch out what comes out of the FOMC meet.
Now, amongst the stocks that we're tracking today morning is Interglobe Aviation, where the company's promoters will sell 79.5 lakh shares via an offer for sale. You will also have IG Mauritius, which will sell about 32.4 lakh shares. Now, the floor price has been fixed at 1130 per share. That's close to 4% discount to yesterday's closing price. So we could see some negative reaction there. But there's one more bank which has come out with its QIP issue, and it's Syndicate Bank, for which the floor price has been set at 88.57. That's a good 5% premium to yesterday's closing price. That apart, we're also tracking Asian Paints, where the company said they have acquired 100% stake in Reno Chemicals and Pharmaceuticals, and that is for a price of 159 crores. But this is broadly from the objective of using the company's land and building. We're also tracking Grasim Industries and Century Textiles. Now, the company Grasim will pay 600 crores to Century Textiles, and that will be to control the filament yarn business, and that will be for a period of about 15 years. So let's see how some of these stocks react. That apart, we could also see some positive reaction on the back of some order wins. One is for Punj Lloyd, where they have won an order worth 276 crores from GAIL India, and another JV of the company has won projects worth about 1200 crores in Myanmar. So we could see some positive reaction there. And you also have NBCC, where they have secured new business for building social housing units in Mauritius, which is said to be worth close to 150 crores. So some incremental order coming from the government of Mauritius. They're already building some housing projects, but this is in addition. So again, some positive reaction there expected to come in, but those are the names that you should track and trade today.
Reliance has actually started preparing for an IPO for Reliance Jio, which started operations earlier this year. The company is waiting for Jio to improve its financial performance. More or less, they have decided on a timeline of 2019, early 2019 or maybe late 2018. These are all initial stage preparations for Jio to list. And the company has not decided on valuations or anything as yet. It all will depend on the market scenario and how Jio performs financially over the next year or so.
Warburg Pincus will be buying around 20% stake in Bharti Airtel's DTH arm for $350 million. Now, Bharti Airtel owns around 95% in this DTH arm and will be selling 15%, while the remaining 5% will be sold by another promoter group company. Now, Bharti Airtel will get close to $263 million from this transaction. Now, this deal values Bharti Airtel's DTH arm at close to around 11,300 crore rupees. A few details about the DTH business of Bharti Airtel. Now, Airtel's DTH arm has close to 13.5 million subscribers. That is close to 20 to 21% of the total subscriber base. It generates a revenue of close to 1,800 crore rupees with a high and has a high EBITDA margin of around 37% for the second half of financial year 2018. Now, the average revenue per user, that is ARPU, was close to 233 rupees, and so far Airtel has invested close to 7,500 crore rupees in this DTH business. However, the contribution of DTH business to Airtel, that is a consolidated Airtel, is very less, as it contributes around 5% to its revenue and 5% to its EBITDA. Now, brokerages have given a thumbs up to this deal, as Macquarie says that these valuations reflect Airtel's strong recent performance in the DTH space, and on EV to FS17 EBITDA, it is at just a premium of around 2% to the combined Dish TV and Videocon entity. Morgan Stanley also says that the deal values DTH business marginally ahead of their estimates, and the cash raised could be used by Bharti Airtel to fund their capital expenditure plans for the India wireless business.
Both the CPI and IIP numbers negatively surprised Street yesterday, with the CPI numbers coming in much higher than Street estimates. On the other hand, IIP growth came in at a below expected number of 2.2%, slowing to a 3-month low. On the back of that, IDFC has blamed vegetable inflation as the reason for the big spike coming in on the headline CPI number. They've said that the latest inflation print vindicates the continuing caution that was aired by RBI on the evolving inflation trajectory. So now they're expecting the headline CPI inflation to remain above the 5% number for the rest of FY18. They've said that this definitely removes any chance of a softer monetary policy stance from the RBI. But having said that, they do not expect the RBI to raise the repo rate, at least not in the first 6 months of calendar year 18, because they don't believe that the growth momentum is strong yet. When it comes to Nomura, there's a similar view coming in. They've said that the rise in core inflation, even if you adjust it for the house rent, it is suggesting a broad-based price pressures which are continuing, and even as the GST effects have faded. They've said that the below estimated IIP growth also reflects a number of transitory factors, like you had front-loaded shipments in September and the fact that we saw an early onset of the festive season. But broadly, all of this data suggests that there is an upside risk to their inflation forecast, because while they expect November IIP growth to rebound, they believe that the inflation pressures are here to stay. Again, they're expecting a hold from the RBI, but they have cautioned that any continued rise in core inflation would be a risk to this forecast of status quo on the policy. And lastly, you have Motilal Oswal, which has said that since the RBI continues to focus on the headline CPI number, any likely reading of above 6% in Q1 FY19 that they're expecting expecting that will only increase the odds of a rate hike in mid-2018. However, they're still maintaining a call of a prolonged pause due to weak growth and the nascent stage of investment recovery that they believe the economy is at. Additionally, they've just pointed out that the union budget will also have a key role to play. So broadly, in their base case, brokerages are expecting the RBI to stay put, but they continue to become more watchful of the inflation trajectory. But do listen in to what D.K. Joshi of CRISIL had to say.
In a way, I think says that RBI's caution on inflation front was warranted, and inflation actually is inching up. And part of it is base effect, but I think we need to watch out for oil going ahead. And I think what's also important is the core inflation, which RBI looks at very closely. I think that went up quite sharply to 4.9%. And I think there a number of factors have led to that. Probably, I think the GST is in the services sector, the rate went up, and I think that's also leading to higher inflation in services, as is visible in this index. So clearly, I think inflation is somewhat of a worry at this juncture. As far as IIP is concerned, I think there were some signals that the IIP growth would weaken in the month of October, because if you look at exports, I think they have performed quite dismally in this month, and there was some GST-related disruption also. So clearly, I think right now looks like this is the dip in IIP growth is transitory, but inflation, I think one will need to watch out for.
Well, some other stocks to watch out for backed by cash volume as of yesterday. First up, we have Engineers India. The stock was up 2% yesterday and saw delivery buying of about 66 crores. The delivery volume went up 3 times at about 35 lakh shares as compared to its 10-day average, and the total volume surged nearly 1.5 times at about 70 lakh shares as compared to its 10-day average. Second stock to watch out for would be Dr. Reddy's. It was up nearly 3%, saw some bit of trading activity, and delivery value stood at about 75 crores. The delivery volume was up nearly 70% at about 3.5 lakh shares versus the 5-day average, and the total volume surged more than 170% at about 16 lakh shares as compared to its 5-day average. The last and final stock to watch out for would be Bharat Financial. It was down 1.5% yesterday and saw delivery selling in excess of 200 crores. The delivery volume surged nearly 4 times at about 21 lakh shares as compared to its 10-day average, and the total volume too surged more than 140% at about 25 lakh shares as compared to its 10-day average.
So on brokerages, first up we have JP Morgan on Reliance Jio listing. Now this note comes after Bloomberg reported that Reliance is considering listing of its 100% subsidiary, telecom subsidiary, that is Jio, in late 2018 or early 2019. They believe that if listing were to happen, it would be positive for Reliance, as it would allow a market price discovery for Jio's digital service model. Now Jio listing could potentially upstream some cash flows to the parent company, which will turn positive for Reliance. Now, in terms of performance, Jio has been steadily increasing its subscriber base, thereby increasing tariffs. Now, JP Morgan expects Jio to be profitable in third quarter for financial year 2018, which is ahead of their planned schedule. Now, Reliance Industries stock price currently values Jio at 13 times its financial year 20 EBITDA. So, overall stock should remain supported in the near term on this news flow. Now, second up, we have HSBC on Jubilant FoodWorks. HSBC maintains their hold rating on the stock. However, they have hiked the target price to 1640 from earlier 1250 rupees, which suggests a potential upside of over 30%. Now, the hike comes after the stock price nearly doubled on a year-to-date basis in this financial year of 2017. They believe that the company has benefited due to increased focus on productivity gains, innovative technology, as well as improved margins. Now, the company aims to continue to optimize cost by offering value offers to their customers, and this is working well for the company. However, they expect that the company now needs to compound its earnings by 20% for the next 15 years, which is beyond financial year 2020, to justify the stock price.
Well, there's a lot to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The Indian government expects investments worth 12 to 13 billion in infrastructure projects through the National Investment and Infrastructure Fund, Economic Affairs Secretary Subhash Chandra Garg said. And in a setback to India's energy giant Adani, the newly elected Queensland government has vetoed a plan to give a $900 million concessional loan for the construction of a rail line in the controversy-hit Carmichael coal mine project in Australia. But with that, it's a wrap on this edition of All You Need to Know. Indian Open is up next.